Hey guys, Forex Lots from BK Forex. Welcome to our weekly Forex technicals for 610, 614. Well, US dollar rebound after taking a pretty brutal hit this week. A trading foreign exchange on margin carries a high level risk not suitable for all investors. I ask you to read this disclaimer very carefully, understand all the risks associated with trading Forex on margin. Seek advice from a financial advisor if you have any doubts. Well, let's take a look at, I guess actually we should really look at dollar yen first because that was the really big hit. Let's look at this. So, um, brutal hit on dollar yen this week. We broke every level, the 100 level, 99s, 98s, 97s, everything went down. But if you look at this on a daily basis, of course, Friday's NFPs was positive, and we have a massive doji here that formed on Friday, basically, um, in my opinion, pretty much creating a near-term spike bottom in dollar yen for the time being. Um, the key thing with the dollar yen trade right now is how well this bottom is going to hold going forward. If this was a weekly spike to the downside, we start to rebuild. There's a potential here, basically, I think, to go to possibly 98, maybe 99. 99 now is resistance. 100 is very, very stiff resistance because that was very, very big support that broke down heavily. If, however, and this could be possible, if you sort of create this structure where you dove all the way to 95s, and then slowly 90, 97, 90, 97, 98 becomes resistance, and you slowly sort of dissipate back down. This is where it's going to get very interesting because we could have a double bottom retest over here before any meaningful upside move. But as we approach 95s, this is going to be a crucial test. If 95 does not hold, it will be a very, very negative development. And if you have a basic complete retrace of this doji move, that generally tends to be a very negative sell signal. It just shows you that even though there was a value proposition, this was a value zone where the bulls came in and bought. It, all of this value buying would be destroyed if 95 broke down, and all of these longer term investors who came in thinking this was going to be an excellent entry point are going to start bailing again. So I think this is really critical view for dollar yen in the longer term, where you're looking at 95 as a key support level that must hold if you're going to make any kind of a meaningful swing bottom at this point. So that's how the dollar is going to shape up in dollar yen. In the euro, we ran, as we've been saying, we ran into the 33 resistance. The NFP move had a small retrace back down to 32s, but as you can see, not much of a real dent in the euro. For the euro to really make a move higher, let me just zoom out. Uh, you can see this a little better on the longer term chart. The real breakthrough has to be the 33s. If we can take out 33s, then we really have open room all the way up to 34, 35s. But we are stalling. This was a long-term resistance level, and it's not unusual to see that this is going to be a big stall. So next week it's really going to be a battle between 32, 33s. We may be back into the sort of a consolidation mode where we churn, churn, churn until we finally get a directional move one way or the other. Euro definitely still has an upside bias. But as I said, 33 is going to be the big cap, and we have to really clear it strongly in order for the euro to have further upside action. Cable also ran into resistance at the 57. They broke through the 55s. Cable had a very, very strong move, broke through the 55s, 56s, but ran into this big resistance at 57, which was the shelf from which it fell long time ago in March. What's interesting about Cable is that it held the 55s quite well. And I think cable may be sort of forming this similar 54.50, 56.50 range. The higher end of this range, this was the massive candle, is going to, I think, serve as a key level of resistance and support. So 56.85, 56.90, basically 57, a break of 57 is the high end here that gives us a real opportunity to take out 58s, possibly even 160s if cable really picks up some steam. And to the downside, it's really being supported by 54. So really, this was Thursday's candle. I think it's going to govern the highs and the lows. It's going to govern the price action for the rest of the week as we're going to probably trade around it. Of course, yesterday was an inside day. It's not unlikely that we have really almost an inside week around this huge range that we put in last Thursday. So I'm watching these two levels as the key support resistance levels and probably a churn within as we proceed. And Aussie dollar just getting hammered continuously, but second day in a row here for those of you who are trying to find some hope in a long position. Second day in a row that the 94 basically 94s. If you, it's at this point we're not even talking about 95s. It's really 94s that kind of got tested and held. The longer they hold, sort of the longer time that 94 goes without being tested, the better the chances you're going to get that this is definitely going to be a near-term bottom. If you look at this, one of the interesting things, side stories on this was, where's my thing? Euro Aussie, which just has been a monster move up, right? Had a huge spike out at around 140 and came right back down towards the 32.90s. It is usually really, really a fool's errand to try to want to pick tops, but 140 is a major round number. You have a big spike out here as the numbers gets tested and it came right back down, and we end up near the lows of the day. So I think one of the more interesting things of playing Aussie at this point, or Aussie strength, if you have any desire to kind of pick bottoms, sell tops, is to look at the idea of possibly shorting this against the swing high here. It could take it out. This is absolutely, certainly very, very possible. But given the balance of risk and rewards, given the gross amount of overbought conditions here, we may see a correction all the way back down to 36s on the Euro Aussie as we make that a final spike out. One thing that would encourage me is if on Monday we had further downside action, and more importantly, if on Monday we didn't even come close to testing the 140s, then that would really sit here as a meaningful swing spike high, and it could give you more confidence that yes, indeed, we could have made a near-term high in Euro Aussie as a long-term position. It's worth taking a look at. Last, dollar CAD. Good data out of Canadian employment numbers. What's interesting about dollar CAD is we're still struggling to try to push it a little, generate any kind of downside momentum here. But the 102.50s did finally break. We're now below the 102s. The general structure of CADI is relatively strong. That's another thing to kind of look at here is if you're looking at the euro correction against the COM dollars. Look at this big. That's a huge bearish engulfing candle, and that could just as you see one here, right? The thing about euro com dollars is it's been a very distinctive sharp up down legs where the turns are really been very, very clear. So that's one of the reasons why it's worth looking at it on a longer term basis, because if this is a sort of a similar analog to this, then what follows should be a corrective phase for the euro CAD. And so what follows here is, yes, this is a very large range, and you would have to have about a 200 point stop on a positional basis to want to concede that this is the top here. But on the other hand, it could correct all the way out to 32s, maybe even 31s on an ongoing basis. So again, two positional ideas in my opinion that I think are worth considering: euro against the Aussie, euro against the CAD, as we have a corrective phase in the COM dollars that may be finally coming. So that's kind of how the week shapes up. I wish you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex, over and out.